We think that the growth rates are going to be higher for longer.
Tech's been one of the worst performers this week, with the NASDAQ breaking some key support levels along the way. For more on where the space is likely to trade, let's bring in Deepwater's Gene Munster. Knows the space pretty well, I'd say. What do you make of all this?
Scott, I make of this as a first disconnect in 2 years between the fundamentals of AI and the trading, and the fundamentals continue to be strong. If you look at what Nvidia said, what Broadcom said, Marvell down big this week on some uncertainty about where Amazon was going to spend a lot of money on AI. And so from the highest level, I always come back to where I've been as a tech investor, is just the fundamentals. And the fundamentals of these companies remain strong. And I'm out here with a prediction that we're going to have 2 good years left, going up into bullish years. It's going to end in a spectacular bursting of a bubble. And what I think of it when I see this, it shakes my confidence. But ultimately, if I focus on the fundamentals, I continue to believe that this trade is going to play out. One last piece, you've enumerated this all week, Scott, but just as a reminder, is that this is common, these pullbacks, 12 of them from 95 to 2000 with .com. This is the second time we've had over the last couple of years. So I put this in the context of this is actually, I view this as kind of a healthy reset of expectations.
I don't think anybody would argue with you at all that the fundamentals remain strong. It simply becomes a question of what you are willing to pay for those fundamentals. Even if so strong, if, let's say, revenue growth is not as strong as it was, what should you pay for it relative to what you were paying before? Fundamental question about investing, correct?
Absolutely. And you hit it right on the head, is this, what is the ultimate growth rate here? And when we think about, again, I'm giving a broader perspective on the AI trade, we think that the growth rates are going to be higher for longer. And so let's just look at Nvidia as an example. Next year, the street's looking for just over 20% revenue growth, down from like 80% in calendar 25 down to mid 20% in calendar 26. I think that number can be meaningfully higher, 35, 40%. And it seems a little bit out of touch with reality, those kind of expectations. But if we're right on that, I think that these stocks will move higher. And just one of the reasons, where does that confidence come from, is that if you take some of Jensen's comments that he had on the last quarter about this 100 to 1,000,000x more compute needed to get to reasoning and advanced reasoning AI. And as we went out and talked to people who are building these, they're companies in our portfolio, private companies, public companies, it's pretty clear he's onto something. And ultimately, if that's the case, and this is going to, I think, surprise some people, is I think that Nvidia's, some of its growth could potentially accelerate early next year relative to the back half of 25.
Well, we said nearly $1 trillion in market cap wiped out since the beginning of the year, or near so, when the stock did hit its high. Let's talk about a stock that you've been so closely identified with over the last handful of years. It's Apple, obviously, from your prior life, obviously, too. The knock on Apple, okay, is that it trades at a premium multiple for non-premium fundamentals. You just laid out the case that the fundamentals remain strong. Apple trades, last I checked, north of 30 times its forward earnings. China revenues are 20%. Components that are loaded into all of these devices come from overseas, where we've been talking about tariffs every single day this week and will be for the foreseeable future. Can you make the case that Apple deserves, I'll use the word deserves, to trade north of 30 times earnings in the face of what I just described?
I think the company can trade in that low 30s, and then as the years advance, I think the numbers will ultimately be higher. And that's my case, is that I think that the street numbers are too low. If you look at the iPhone growth numbers for fiscal 25, the street's looking for 1%. I think that number could be 3, 4, or 5%. They step up for fiscal 26, so as we advance through the year, there's going to be more focus on the out-year number, but it steps up to 8%. I think that that's probably the right number. And so I think as a starting point, making the case for the multiples, I believe that there is upside to the numbers.
Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. That's going to be Megan Brantley, VP of Research at Likefolio. Welcome back to the show, Megan.
Thanks for having me, guys. Happy Friday.
Happy Friday to you. I think it's not a happy Friday for Nvidia investors. Over the last couple of months, the stock's pulled back 28% from those all-time highs. Megan, you know, we've talked with you guys at length about Nvidia before. You guys are always pretty positive. You know, all these big tech companies are saying that they're investing in all the AI infrastructure. Nvidia takes advantage of that, but it seems like maybe investors are looking at this stock and this company that maybe the best days are over for Nvidia, because that's the way it's been trading.
Yeah, you know, we have talked a lot about NVIDIA in the past, and we were excited about NVIDIA then. We are definitely excited about it now as it trades at these lower levels. And we see a lot of this being driven by some fear and uncertainty regarding the impact of potential trade policies and just this rate of sustained growth. I think that NVIDIA has performed so well, it's natural for investors to say, okay, how much can this growth keep going at this pace? And at what point is this overvalued? So at these levels, we can look at things, and the places that we can look for NVIDIA are overall consumer demand. So are people continuing to talk about NVIDIA and its products, specifically its Blackwell line, at a higher rate? And are they visiting sites and showing signs of forward-looking interest for NVIDIA? And so far, at least in our metrics, they are. We see NVIDIA web visits up by about 22% year over year. And this is actually accelerating if you look at this on a 30-day moving average versus a 90-day moving average. And what's impressive about this, for us, this is just a sign of momentum. So for us, this tells us that demand is continuing to outpace that supply. We look at this too, and what's crazy is that NVIDIA already has a really significant mind share and market share versus other players in this field, yet its growth rate remains the highest. It is nice to see AMD start to gain some traction there as well when it comes to consumer interest, but NVIDIA is already the largest player in the game, and it's just extending its lead. And so I think as an investor, that's really powerful to know that this is the best of breed, and at least on our end, you know, the chatter and discussions related to its products continues to grow.
You know, Megan, everyone keeps waiting for the drop off, right? We've seen it Tom and I have seen it in AOL and in that, and we've seen it lately in streaming. Right? And now everyone considers this the next bubble in AI. But bubbles, I mean, what inning are we in, Megan, is what people want to know, right? Are we late? Because the numbers putting out in CapEx spending, and here they are, projected $204 billion in CapEx spending with a net income of $113 billion from that CapEx spending, which we all have a pretty good idea that NVIDIA is going to be the recipient of a lion's share of that. So, but yet, you know, there's naysayers out there, and there's obviously the stock is significantly off its recent highs. And are we going to look back 6 months from now? How are we going to view this period of softness, not in just in NVIDIA, but in the overall market? How are we going to see this in 6 months? Was it just a massive buying opportunity? What was it, just a big, you know, collection and people getting out? Or is this the obvious? Remember, in streaming, all the streamers sold off, but Netflix turned out to be a screaming buy when it sold off with the other streamers. What do you guys think? What does your data say about NVIDIA? And the simpler question is, what inning are we in, Megan?
You know, I wish I had a crystal ball to go forward 6 months and be able to make the exact right call here, right? Wouldn't that be amazing? But the way that we look at this, I love the analogy that you used with Netflix and its best of breed, because NVIDIA reminds me of the Netflix of this space. This is a company that's proven it's agile. It's able to shift up product and innovate to meet consumer demand where that demand's needed. I think if you look at just the overall growth and strength of its data center products, that's now driving 91% of its revenue. 2 years ago, it was 60%. So this is a company company that can pivot and lean into areas of demand where necessary, and it's driving all of the technology innovations that we see when we talk about AI at large. I know the company itself has said that next-gen AI models will require millions of times the current compute power that is currently being used. And so obviously the company itself is optimistic, but you can look at some of the CapEx spend, like you mentioned, when we look at these big tech players from Meta to Alphabet to Microsoft, and we continue to see these players increase their CapEx spend pretty significantly even from last year. So I think NVIDIA is really well positioned to take advantage of this. We still think it's fairly early. We're not one of the naysayers in that camp that say that this bubble is bursting. But I think that it is going to be interesting to see how this uncertainty and fear at large and this pullback that we're witnessing right now in the market, how long this lasts. As terms of a new potential catalyst for NVIDIA, I know that there's an investor conference coming up in about 10 days that could spark some interest. There could be some updates on demand and product innovations, and it will certainly continue to dominate the news cycle. But for us at large, we see NVIDIA as a best of breed in AI, and we like that it is continuing to expand its consumer mind share, and we'll just be continuing to listen to these players who are gobbling up its GPUs as fast as they can to see how long this growth can sustain.
Yeah, we'll continue to watch this story because it's below some key support levels. All right, great stuff, great data as always. Megan, have a great weekend.